In the US session, there's a inverse head and shoulder pattern showed up. So just take a look at this. So there's the left shoulder, head, right shoulder, and that's the neckline. So in the trade review section, I'm going to show you how to actually trade the inverse head and shoulder pattern the price action way or the Wyckoff way by analyzing the swings and also the supply and demand. And you can compare the pattern trading together with the price action trading to see which method you prefer. Hi, my name is Ming Jong and welcome to another episode of the daily market analysis for the S&P 500 E-mini futures for the session of 12th of November. So in this video, I'm going to share with you the market recap from yesterday's session and also a possible trade review that's involving the inverse head and shoulder pattern, where I will just dissect it in the price action way. And also in the later part of the video, during the market outlook section, I will also share with you the trading plan together with the levels that I'm watching to prepare for the session later. Alright, so let's just get started. So first of all, let me get back to the daily time frame and let's start from the daily chart. So as you can see in this daily chart, let me just drag it a little bit further. So yesterday we have a very tight range. So you can see that the range here, actually if you look at the daily chart, it's probably not that tight, but if you look at the US session, it's certainly very tight range. And one thing that stands out is we have a very low level of the volume and we have a up bar, a small spread bar. And by looking at this past three bars here, so we have a very strong rejection right at this breakout bar here. A lot of the supply spike followed by a reaction down. So yesterday action did not have any downside follow through, which is a very constructive sign for the bullish case. So let me just get down to the hourly time frame and let's talk about the market from yesterday. So you can see that during the US session right here, that's about 10:30 p.m. at my time zone, we see that pretty much the market is consolidating within a very tight range. It's from about 35.50 to maybe 35.70, about 20 plus points. So let me take a look at the Globex here. So the Globex actually shows a bit of the grinding up action. So we have a slight up, a breakout here. So that's the immediate support level at about 35.50. So during the London session, have a breakout followed by inch up a bit, and during the US session, it's pretty much just fluctuating or consolidating between the tight range as shown here. So it did not really touch the levels that I anticipate, the immediate resistance level, which was the all-time high level, 35.87, nor the previous swing low level at about 35.10. So instead, it kind of tested this level, the 35.50, which was the resistance turn support level, followed by a rally up. So let me get down to the 3 minutes time frame and let's talk about the inverse head and shoulder pattern and how to actually trade the inverse head and shoulder pattern, not the pattern trade away, but using the Wyckoff analysis and also just purely based on the price action alone, and explain all the details together with the supply and demand. So you will notice the difference when you compare the two methods. So the traditional way, I think it's very straightforward. Once you identify the pattern, for example in this case, we have a left shoulder followed by a head and subsequently a right shoulder. So it's not a textbook style head and shoulder pattern, but I think it's very close. It's close enough. And we have a tilted neckline. So the traditional or the pattern trading style is just to trade this kind of the breakout. So once you break this neckline and right after the shoulder form, and you can just write a trend up. But I used to be a pattern trader. I just spot a lot of the pattern and just trade accordingly. But I find that sometimes it's quite meaningless to just trading the pattern, because without analyzing the volume and the force behind, and to craft a background story, how related or what's the context behind the movement, so sometimes it's become very meaningless. So what I would like to do is just to compare these two methods. So I already just mentioned that the pattern trading way is just to spot the inverse head and shoulder. So that's the left shoulder, head, right shoulder, and that's the breakout. So that's your long entry. I think it's clear enough. Once it's break off the neckline, the tilted neckline here, probably you can enter long, and subsequently probably can ride it all the way up. And now let's take a look the price action. So let's analyze a bit. So before I do that, let me give you a bit of the context as usual. So you can see that prior to the US opening session here, and we have the Globex period. So during this Globex period, we have a uptrend, grinding up. So not very impressive. So the price movement just move it within this up channel, and subsequently just prior to the opening session, we have seen this small trading range form. So there is a topping action here, a topping formation, so that's the trading range, and then followed by a breakdown, backtest again, and continuation to the downside. Tested the support level at about 35.50. So this support level 35.50 was based on the previous day high. So you can see that I marked the previous day high, and subsequently they kind of acted a bit, have a few touches during the Globex period as well. So during the US session, it kind of just touched it, and no commitment to the downside, and kind of consolidate before it just rally up. So let me just dive straight in. So that's the first leg down, and then followed by a upswing, and this reaction down actually tested the support level, and we can see that overall the volume has been decreasing. So I would say that the supply has been decreasing, and this rally actually is one of the best rally that we've ever seen out from this downtrend alone. So if we just compare the rally, so that's the best rally, the best upwave that we've ever seen. So that just suggests to me that something is different. So we have seen the downtrend kind of maybe broken or maybe just tested, and this is definitely the best upwave that we have ever seen. And one thing that is very interesting is definitely the supply signature, the volume signature. So we have seen that overall the volume has been decreasing, but suddenly right after this upwave we have seen a pullback. So that's the right shoulder here, and this pullback actually comes with the increasing of the supply. So the supply actually started from here. So this bar, this rejection tail, despite that is a green volume bar, but definitely this is where the supply started. So we have seen the rejection and also the spike of the volume, and subsequently you can see that we have the increasing of the supply, especially in the last two bar here. So overall I would say that this downswing, compared to the previous downswing, maybe here definitely shows an increase of the supply. But take a look at the results here. It just barely tested the localized trading range here. So that's the localized trading range, acted as a support, and it did not really go all the way back to test the swing low here. So instead it just formed a higher low with an increasing of the supply. So definitely in terms of the results, it doesn't look that bearish. despite we have an increasing of the supply, we still get a higher low. So that really suggested to me that there's demand presence when there's the downswing happening right there. So especially in this 2 bar alone, so there are demands presence, and subsequently we have seen this bullish bar, and that's where the reversal happened. So with the price action trading, I think that this could form as a very good long entry, because this is downswing with the increasing of the supply level, tested the support, and then followed by the bear sub wave, and subsequently the pullback acted as a test of the previous downswing, comes with the overall decreasing volume. And despite the localized increase of the volume, if we compare it to this part here, we have seen that the results to the downside is not there. So the results did not really show up. Instead, it just formed a higher low. So that suggests to me that there is presence of demand. So right after the confirmation bar, which is this bullish big spread bar, that could present a good long entry. So you can see that this is slightly earlier than the trading the pattern breakout right there. It's about 1, 2, 3, 4, about 4 bars earlier, about 12 minutes earlier. But overall, I prefer this type of the explanation, because it does really paint a better story and tell us where the price is going to move, and based on the supply and demand, and together with the price action alone. So just by comparing the pattern trading together with the price action trading, I still prefer the price action way, because it makes more sense to me. But anyway, certainly I know that there's a lot of the pattern trader. Then here you go, that's your long entry right there. Alright, so this is the trade review for the S&P 500 for the yesterday session. But anyway, I did not really take this trade because it happens quite late at my time zone. You can see that it's roughly around 12 o'clock at night AM. So definitely no trade for me. And subsequently, I don't really think there is much trading opportunities, apart from if you were to trade maybe this kind of the topping formation followed by a breakdown, and you probably can ride this downswing in the last part of the trading. So it's roughly around 3 AM at my time zone. So there's a trending opportunity. So you can probably ride that if you spot the trade setup. Anyway, let me get back to the hourly time frame, and let's talk about the current market condition. So far, not much exciting price action, apart from the breakout day, which we have seen it happen with a spike of the supply together with a lot of the bearish profit taking action. And subsequently, for the past 2 days, we have seen supply has been decreasing and also pretty much fluctuate within this tight trading range, or you can call it an upsloping range. So overall, for the immediate support level, I would say that will be somewhere around the swing low here, 35.10. And for the resistance level, definitely the previous day low, day high, that's somewhere around 35.75, or even this level, 35.50. So that could be acted as a axis line where the support and resistance and support. So let's see if we can just go back up and test the resistance again. Otherwise, there is a chance for it to go down to test the lower part of the support, about 35.10. Still, I would like to see some kind of the interaction at around 35.87, which was the previous all-time high level. So let's see if the price, the S&P 500, can go back and test the resistance level. so that could present a good short opportunity if there is rejection. Otherwise, probably somewhere around the support level at 35.10. So far, that's the immediate levels that I'm watching, and I always like to trade at the key levels, like the key support and resistance levels. But further down, you can see that 35.50 to around 35.20 is still another level. So that's where the previous price consolidate a little bit there. So that's the support level, and we can see it actually interact a bit. So that's the next support level at 35.50. This is the end of the video. Hope you enjoyed it. So if you'd like to learn more on how to increase your winning rate, definitely check out the video that showed up on the screen right now, and do remember to subscribe to my YouTube channel so that you get instant notification of my future video ideas. And also do remember to join my email list if you'd like to have my personal stock watch list, where I will just email you once per week. Alright, thanks for watching. I will talk to you soon.